Today, we are diving straight into the absolute beating heart of professional trading, which is MetaTrader 4, or as everyone calls it, MT4. Look, if you've been studying the financial markets for a while, you probably know the theory inside and out, right? But MT4, that's where the actual magic happens. This is the professional standard tool where you'll execute those trades, read the charts, and literally put all those strategies to work. So let's demystify how this platform setup actually works together.
All right, here's our game plan for today's explainer. We're going to start by simply meeting MetaTrader 4, getting to know what it is, followed by a quick tour and setup of the dashboard. Then we get into the really fun part, reading charts and adding indicators. From there, we'll actually walk through placing your very first trade, how to manage it once it's live, and we'll wrap the whole thing up by covering the massive beginner mistakes you absolutely need to avoid.
Okay, Section 1, Meet MetaTrader 4. Now, before we go clicking download buttons and installing a bunch of software, we really need to understand exactly what this powerful tool does. So, the absolutely crucial point here is understanding the relationship between MT4 and your broker. I like to think of it this way. MT4 is basically your car. It's the vehicle you're actually driving into the financial market. Your broker, whether that's Deriv or literally anyone else, they're just the gas station, right? They provide the fuel, they give you access to your funds and account credentials, but MT4, that is the car you are actively driving to get the job done.
Now, you might be wondering, wait, why MT4? Isn't there a newer MetaTrader 5 out there? And yeah, there is. But get this, a staggering 90% of brokers still offer MT4. Millions of professional traders worldwide refuse to use anything else. Why? Because it's the reliable, incredibly powerful industry standard. It's totally free, it doesn't bog you down with unnecessary, flashy features, and honestly, the pros just know it inside and out.
Getting the platform set up is an absolute breeze. Just follow 4 really simple steps. First, download the MT4 desktop version straight from your broker's website. And hey, the Windows desktop version is highly recommended here because it's definitely the most powerful format. Second, install it. It's a tiny 100 megabyte file, takes maybe 2 minutes using the default wizard. Just click Next through the prompts. Third, launch that shiny new app. And fourth, log in. You just need the server name, your account number, and the password your broker gave you. Wait about 5 seconds, and boom, you are in.
Moving right along to Section 2, Dashboard Tour and Setup. When you first log in, the screen might look a little bit like a spaceship control panel. Don't panic, I'm going to break this dashboard down for you right now so it's not overwhelming in the slightest.
Let's see how your workspace actually builds out. The interface essentially has 6 key spatial areas. Up at the very top, you've got your top menu bar. You know, standard file and view stuff that you honestly won't use much as a beginner. Right below that is the toolbar, which houses your most important tool, the New Order button. Over on the left is the panel for your accounts and Market Watch. Actually, scratch that. Just close that left panel for now to save screen space. Dead center, that is the main action area, the focal point. Down at the bottom is your terminal, showing your active trades and history. And over on the right is where you can add extra indicators. But remember, that center chart is where your eyes need to be.
Which brings us to Section 3, Reading Charts and Indicators. We are now focusing entirely on that center chart. This is the beating heart of MT4, where all your actual technical analysis happens. The core language of trading is surprisingly simple when you just strip it down. A green candlestick simply means the price went up during that specific time period. Spot a series of these making higher highs and higher lows? Boom, that's an uptrend. Conversely, a red candle means the price went down. Lower highs and lower lows, that forms your downtrend. Now, it is absolutely crucial for beginners to select the right time period for these candles up at the top of the chart. Stick to the H4, which is the 4-hour candle, or the D1, the daily candle. These higher time frames are way more stable, and they drastically reduce the messy market noise that's just going to confuse you.
So, how do we make sense of all these trends and candles? We add indicators, and it takes just a few precise clicks. First, right-click anywhere on your chart, select Insert, and go to Indicators. Next, you'll want to add a trend indicator, specifically a moving average. You'll typically use a 50 or 200 period. This shows the average price over the last 50 or 200 candles, totally smoothing out the noise so you can spot the true trend. Finally, go back to Insert, Indicators, select Momentum, and add the Relative Strength Index, or RSI. The RSI pops up at the bottom of your screen and basically tells you if the price is overbought, meaning it's probably going to reverse down, or oversold, meaning it might shoot back up.
And this brilliantly illustrates the golden rule of chart setup. Keep it simple.
a 50-period moving average in blue, paired with a 200-period moving average in red alongside your RSI down at the bottom, that is the absolute perfect beginner setup. Combining just these 2 or 3 indicators completely prevents screen confusion and hands you a crystal clear, actionable strategy. If the price is above the moving averages, the uptrend is strong. If RSI is below 30, hey, that's a buy signal. It's all about clarity and just removing the guesswork entirely.
All right, Section 4, placing your first trade. This is the climax of our explainer right here. You've got the platform set up, your chart is perfectly tuned, and now it is time to actually execute a real trade in the live market.
So here are the exact mechanical steps for turning your analysis into action. Step 1. Choose a major currency pair, something like the Euro-USD. As a beginner, strictly avoid those exotic pairs with crazy wide spreads. Step 2. Analyze the chart. Are those moving averages indicating a solid uptrend? Is the RSI between 40 and 60 with price bouncing off the moving average? Okay, once you see a clear signal, Step 3. Click that New Order button in the top toolbar. This opens a dialog box where the real magic happens. Step 4. Input your volume. By the way, 0.01 lots is the absolute standard for beginners on a demo account. Then, and this is vital, enter your exact stop loss and take profit levels. Finally, Step 5, click Buy if you expect the price to go up, or Sell if you expect it to drop.
Now, I need you to listen to me very carefully on this next point. Never place a trade without a stop loss. Never. I don't care if you're on a demo account. This is your ultimate insurance policy. Look, if you buy Euro-USD at 1.0900 and set your stop loss at 1.0880, you know exactly what your maximum risk is before you even enter the trade. If you're wrong, the trade closes automatically and you live to trade another day without completely blowing up your account. Seriously, do not skip this step.
Moving into Section 5, managing your active trades. Okay, so you clicked Buy or Sell. Your order is live, and you can see it sitting there in the Trade tab of your bottom panel. Guess what? Your job just shifted entirely from execution to management.
Once a trade is actively running, you basically have 3 main choices. First, you've got the trailing stop loss. This is where you manually drag your stop loss to break even or even into profit as the price moves in your favor. It firmly secures those gains. Second, you can just close early. Right-click the trade, hit Close Order if you spot some sudden bad news and want to lock in your current profit right then and there. But look closely at this third option, walk away. Honestly, for beginners, I strongly advocate for this approach. You set your stop loss, you set your take profit, and you literally do nothing. You walk away and check back in a few hours. Why? Because sitting there watching every 5-minute tick completely triggers emotional panic and micromanaging, which almost always causes new traders to close their winners way too early and hold on to their losers for way too long.
Here's a super quick pro tip for your account settings that'll help you visualize your real money effortlessly. If you right-click the chart and hit Properties, you can figure out your exact pip value. For example, if you're trading the Euro-USD with 0.01 lots, 1 pip equals exactly $1. Simple. So when your open trade shows 50 pips in the green, you instantly know that equals $50 in profit. Knowing this math right off the bat removes all the stress and guesswork from the equation.
All right, Section 6, avoiding common beginner mistakes. We are in the final stretch, and this section is absolutely critical. Let's make sure you avoid the classic traps that consistently wipe out new trading accounts.
Let's rapid fire through these 6 massive red flags so you can start trading like a pro. Mistake 1, trading without a stop loss. We already covered this, no exceptions, ever. Mistake 2, trading 1-minute timeframes. Guys, there are way too many false signals and just too much noise. Stick to the 4-hour or daily charts. Mistake 3, using 10 or more confusing indicators on one screen. You only need a maximum of 2 or 3 to see the trend clearly. Mistake 4, risking more than 1 to 2% of your account for trade. Look, if you have a $500 demo account, you really shouldn't risk more than $5 to $10 on a single setup. Mistake 5, revenge trading. If you take a loss in MT4, do not immediately open another trade just to win it back. Stop. Take a break, come back tomorrow. And finally, mistake 6, forgetting to update your stop loss in a winning trade. Always lock in those profits as the price moves in your favor. Total discipline with your position sizing and emotional control is literally what separates the professionals from the amateurs.
So we've walked through the entire MT4 platform setup today, all the way from the initial download straight through to executing and managing a live trade. But listen, before you even think about diving in with real money, I strongly encourage you to practice opening and closing trades on your demo account for the next 2 to 4 weeks using just that simple moving average and RSI setup we talked about. To wrap things up today, I want to leave you with a provocative question to chew on. Which technical indicator confuses you the most right now?
Identify it, go back to your MT4 charts, and take the time to truly master it on your demo account. Thank you so much for joining me on this explainer. Keep learning, stay disciplined out there, and I will catch you on the next one.